Good day, Philippines. Good day, Zamboanga del Norte. In late October 2025, the Philippines peso hit a 2025 high of 59.15 pesos per US dollar, which benefits households receiving US dollar remittance such as the dependent students who celebrate the rate but harm those earning in pesos, forcing them to cut basic expenses due to the higher cost for imported goods, fuel, and commodities. The Bangko Sentral ng Pilipinas has warned this peso depression alongside global oil prices on September 1.7% inflation beyond the 2 to 4% target range. This plate impact exposes as unequal economic reality. The peso's decline creates relief for some Filipinos while worsening survival struggles for
The Philippine peso is strengthened to 58.99 peso per US dollar, recovering from a near record low of 59.22 peso and $1 last week. This rebound follows signals from the Bangko Sentral ng Pilipinas that its recent 25 basis point rate cut, the fifth consecutive, might conclude the current easing cycle. Bangko Sentral ng Pilipinas Governor Ili Remolona Jr. indicated that future monetary easing would be limited and data-dependent, restoring market confidence. Additionally, seasonal factors such as increased remittances from overseas Filipino workers during the holiday season are boosting demand for the local currency. And this combination of central bank messaging and seasonal inflows is contributing to the peso's current stabilization.
Weaker peso benefits exporters and raises the peso value of OFW remittances, helping support domestic consumption. Prolonged depreciation and can create serious problems such as debt payment and lower investors' confidence.
Current dollar to peso exchange rate significantly affects the Philippine economy by increasing the cost of imported goods, which leads to higher inflation and reduced purchasing power for consumer. As production costs rise, businesses may struggle and overall economic growth can slow down.
The Philippine peso's exchange rate against the US dollar has been experiencing fluctuations driven by economic trends, monetary policy decisions, and domestic economic development. A weaker peso can stimulate exports, attract tourists, but it also leads to higher imports and cost and potential inflationary pressures. Conversely, a stronger peso can benefit consumers to cheaper imports and lower inflation, but may negatively impact export competitiveness and tourism. Experts are trying their best to maintain and sustain economic problems. The Bangko Sentral ng Pilipinas is aiming to strike a balance between supporting economic growth and maintaining inflation control. According to experts, the peso is expected to trade around 57 per $59 in the Philippines these coming months. As the economy navigates these fluctuations, stakeholders are advised to stay informed and adapt to the changing of our economic